A very good afternoon, friends. I take this opportunity to welcome you to this 95th event of the Auditing and Assurance Standard Board of the Institute of Chartered Accountants of India. And I take this opportunity to also welcome our learned speaker for the day, Mr. Mukul Bindal, CA Mukul Bindal, who is going to take us through the very, very important topic of audit sampling. Friends, before we go into the technical aspects, I would like to thank all of you who have been supporting these initiatives from the AASB, and that is what has encouraged us as well as motivated us to bring out this 95th webinar or event, I would say, technical session, to be more precise, in a span of just about 7 months. And we look forward to hitting a century pretty soon with your support and your blessings. Uh, in fact, I would say that in spite of these webinars recently being an unstructured CP, we have still been able to get more than 1,500 participants in each of the webinar, which shows the intent of the participants, where they are actually willing and they are eager, they are motivated, they are positive in learning the various aspects with respect to the auditing standards, which would make this profession much more better in terms of compliances, in terms of documentation, and in terms of the auditing standards and how they are implemented across the country, across the practitioners, and more so by the small and medium practitioners. Friends, coming to the topic today, audit sampling, I think nobody would undermine the importance of audit sampling. It is something, ever since I would say we have been a kid as a chartered accountant, I would say not a kid in the life, but kid as chartered accountant. Sampling is something that we have day in and day out used the word and also implemented and practiced it. But I very strongly believe, and that is what Mukulji would also guide us through, that sampling is not so easy. It is a science as well as an art on how to ensure that we pick up the sample, a perfect sample, during the course of our audit, which would not only just bring about the audit quality, but also audit efficiency. So I think I leave the rest to the learned speaker today, who has more than a decade of experience in auditing, CA Mukul Bindalji, who is currently working as a senior manager with one of our reputed organization, a CA firm. He has expertise in power sector and experience of working for diverse industries like manufacturing, retail, oil and gas, finance sector. And Mukulji has been a speaker at various forums, various technical sessions of the institute at different levels, be it the branch or the institute. So Mukulji, on behalf of AASB, I thank you and welcome you. And thank you for accepting our invitation and sharing your knowledge amongst the members. So with this, friends, I would hand over. I would request Mukulji to kindly take charge of the session. And before Mukulji takes charge, I would also like to thank Anilji, who is here, who has been working hard day and night, and also the technical team, who has been able to bring you so many sessions in such a short span of time. So thanks to everybody who is directly or indirectly connected with this activity. Over to you, Mukulji.
Yeah. Thank you so much, Vishalji and Anilji, and all the members of the AASB for giving me this opportunity to speak in this great forum. And with this, I would like to start my session, and I would present my screen. Just let me know once my screen is visible.
Yeah, it's visible now.
Yeah, thank you. So good afternoon, everyone. Good afternoon, everyone. Before starting the detailed discussion on audit sampling, first of all, I would like to explain what all topics in the audit sampling we would be going to discuss during this 2 hours of session. First, we would understand what is the overview of audit sampling. Then next is the need for the audit sampling and what is its role towards appropriateness and sufficiency. Then our standard talks about sampling foundation. So I would call it a sampling journey. So in the sampling journey, there is one sampling process where you identify the population, you identify the sample design, size, and then you select certain items for the testing. Then the next is, in this sampling journey, there is sampling techniques which are prescribed in the standard. So you can select any of the technique which are given in the standard. They are suggestive techniques. Then thereafter, post you have selected the samples, what audit procedures you need to perform. There are suggestive procedures given in the standard, and what you should do while evaluating the results of your testing for those audit samples. Then we would discuss around certain practical examples for sample selection in test of controls, as well as practical examples for selection of samples and test of details. Then we would summarize our discussion towards end, and we would also discuss about the limitations of the sampling. Then what are the key documentation considerations while for the sampling process given in the standard, and what are the ICI resources available in the public domain which will guide you, or which will provide the detailed guidance towards audit sampling for the future reference. So to start with the overview of audit sampling. So our standard says auditor is required to express an opinion on the financial statement based on examination of records of the transactions. So it says auditor is required to provide an opinion on the financial statement based on certain examination. In order to perform an examination of records, any individual as an auditor cannot test the 100% of the population. So he would have to identify the population or the transactions which he need to test. This process of selection of those transactions to be tested, or the information to be tested, is called audit sampling. So if we read the definition which is available in the standard, it says application of audit procedures to less than 100% of the items in the population to obtain an audit evidence, and performing the audit procedures on those population or the items which are selected for the testing is called audit sampling. Then there is a concept that, or I can call it as a benefit of audit sampling, that it removes ad hocism. Since you are putting a scientific process, or you are defining the process through which you are selecting the items to be tested, so there is no ad hocism which is involved in your auditing process. So it is again one of the benefit of audit sampling. As I said, it provides a scientific and logical foundation for test check to be applied by the auditor. Then it enables the auditor to select some transactions out of large mass of similar transactions data. Since there are various sampling techniques available in the standard, so it provides guidance or method through which auditor can identify the items to be tested as a part of audit procedures. Then, as we all know, there are two types of audit procedures: compliance procedures and substantive procedures. So by compliance procedure, it means the test of controls, and by substantive procedures, it means the test of details. So while you're performing the compliance procedures, you are testing the controls of the entity. Then in that case, you would need to understand all the significant class of transactions for that particular entity, all the processes in the company. So whenever you start an audit, you start with the compliance procedures. You understand the process of the company. Taking an example of the revenue process. So in order to understand the revenue process of the company, first you would need to identify certain samples to understand what is the process which company follows. So in order to understand the revenue process, you would need to select certain revenue samples. First, you have understood, then you would need to test the controls. So in order to test the controls, you would need to select certain samples to provide an opinion, or to form an opinion whether the controls are effective or not. So in this entire process, you would need to select certain samples for your testing. as we all know that there is a ICFR opinion which is issued by the auditor as a part of the statutory audit process. So in order to form that opinion whether the controls are effective or not, you would need to test certain samples. So this standard provides the guidance how you can select the samples for completing your compliance procedures. Secondly, once you have completed your compliance procedure, next step is to identify or to design your substantive procedures. So in substantive procedures, you will test the details for a particular caption in the financial statement. So again, take an example of the revenue. First, you have understood the control environment for the particular revenue process, and you have concluded that internal controls are effective. Then you would need to identify what samples you need to test as a part of your test of details to provide an opinion on certain assertions of that particular account. For revenue, for the completeness as well as accuracy, you need to provide an opinion. So again, this standard provides the guidance how you can select the samples for designing your substantive procedures. Now, this audit sampling can be divided into two parts. One is statistical sampling, which it has another name called mathematical sampling. And second is non-statistical sampling, which involves the judgment. So there are various methods given in the standard. Any of the method can be used as a part of our audit procedure. Then there are certain limitations which exist in the audit sampling. So we will be discussing about those limitations also in detail in the subsequent part of the session. So to start with, first we would need to understand what is the need of audit sampling, or so to say, what are the benefits of the audit sampling. So first of the benefit is it helps the auditor to obtain and evaluate the audit evidence about some characteristics of the items selected. So as I said, when you start the audit, you would need to understand the control environment of the company. You would need to understand the processes of the company. So I give an example of revenue. So for revenue, you would need to understand the revenue process. So if you go to a company and there are two streams of revenue for that particular company, then from each stream, you would identify certain samples to test to form your understanding of that particular revenue process. Then this process of identifying that there are two streams and from each stream you will select the sample, this entire process is called audit sampling. So this sampling process helps you to gain an understanding of characteristics of the items which are selected. Thereby you can take an understanding, or you can form an understanding of the entire process of the company. Then another benefit is plays an important role in the auditor's ability to evaluate both internal controls and account balances. So as I said, it helps in compliance as well as substantive procedures. That is test of controls as well as test of details. It helps, it gives you guidance how you should select your samples for performing both test of controls and test of details. Then it plays an important role in that particular caption also. Then it enables more focused examination without incurring enormous cost and efforts. Let's take an example. If an auditor of the bank checks each of the transaction of the bank, so a bank has various bank transactions. So it is not feasible for the auditor to check each and every bank transaction. If he does that, then it would end up in the enormous cost and expending a lot of time. So audit sampling helps you to save cost as well as time, and it helps you to keep your focus on the important items which are selected through your sampling process. Then another benefit is it establishes the objectivity and credibility of the audit results. and gives more meaning to the audit approach. So since you are putting your entire focus on particular samples which are selected through audit sampling, then it provides you objectivity, that your object is to test only these samples, and thereafter you can form a conclusion on the entire account balance. So there are no statutory requirements which specify what work is to be done and how it is to be done, whether you should use audit sampling or not. It is not obligatory for the auditor. So it is not a law that you need to perform your audits through audit sampling only. It is a professional judgment again. So there is no statutory requirements. Your ultimate objective is to express an opinion, and you can express your opinion based on sample testing as well as based on testing of the 100% of the population. So again, it is a professional call, professional judgment. So these are certain experts which are given in the auditing standard, which is SA 500. So if I read out it for you, it says an effective sample test. So it says an effective sample test provides appropriate audit evidence. So in order to form your opinion on a financial statement, you would need an sufficient and appropriate audit evidence. And for obtaining a sufficient and appropriate audit evidence, you would require an effective sample. So it says an effective sample test provides appropriate audit evidence to an extent that, taken with other audit evidence obtained or to be obtained, will be sufficient for the auditor's purpose. In selecting items for testing, the auditor is required to determine the relevance and reliability. So again, it is talking about what you should do in the sampling process. So ultimate conclusion is that if you select an effective sample, then in that case, you would end up obtaining appropriate and sufficient audit evidence. Then again, these are the extracts of SA 500 only. Now I would move to the next part. Next slide. Yeah. So this is the sampling foundation, or we can say this is the sampling journey, which is given in the standard, which talks about sampling process, where we would understand how we should identify the population, how we should design the sample, how we should determine the sample size, and thereafter how we should select the sample. That is this sample selection techniques. Then thereafter, what are the procedures, audit procedures we need to perform? Then based on the audit procedures, if there are any deviations or misstatements which we need to identify. So deviation is the word which is used for the test of controls. Misstatement is the word which is used for test of detail. Then there is a concept of projecting misstatements. And at the last, once you have completed all parts of the journey, then you need to evaluate the results of your audit sampling in order to form a conclusion on the account balance or the controls. To start with the sampling foundation, step 1, which is identification of population and determination of the sample design. So in order to understand, first we would understand what is the meaning of population. It says entire set of data for which sample is selected, on which the auditor wishes to draw a conclusion. So let's take an example of revenue again. So if you are supposed to provide an opinion on revenue process, whether the controls are effective for revenue or not, then your population would be your population would depend on the control which you are required to test. So suppose you're testing the controls on the completeness of revenue, whether the revenue has been completely recorded or not. And suppose there are 12 transactions of revenue, one transaction each month, then your population would be 12 invoices from where you need to select the samples for testing of the controls. Similarly, for test of details, again, your population would be these 12 invoices of revenue throughout the year, from which you need to select the samples for test of design. Now, what are the considerations which should be applied by auditor for selection of population? First, he should understand what is the purpose of audit procedure. So in case of revenue example, his purpose is to form an opinion on the revenue account balance. So if he is supposed to perform, provide an opinion on the revenue account balance, then his population should be related to revenue only, that is the revenue transactions during the year. Second is auditor's knowledge of area under consideration. So in my example, as I said, there are 12 invoices throughout the year, one invoice each month for the revenue. Then it is the auditor's knowledge. So he has applied his knowledge, and thereafter he knows that his population should have 12 invoices. So this is another consideration generally an auditor applies while selection of the population. And the last is characteristics of the population. So again, the population, if he is supposed to form an opinion on the revenue, then his population should be related to revenue only, that is the revenue transactions or the entries or the invoices throughout the year. So there are certain examples which are given in the standard or the relevant guidance available in the public domain. So if population is whole mass of transactions, for example, if you are performing the journal entry testing, which is one of the audit procedure for your fraud risk, then in that case, your population would be J dump, the journal entry dump, the entire transactions detailed throughout the year which have been carried out in the entity. If your population is information contained in accounting records underlying the FS and other information, for example, ledgers. So as I said, for revenue, there would be ledger which will have 12 transactions for the entire year. If you are testing certain bank transactions, then your population can be bank statement, that is the other records or documents, whether internal or external, supporting the information contained in the accounting records. So if you're testing the bank balances, or suppose there are 100 bank accounts, then in that 100 bank accounts, you need to obtain the 100 bank statements, and out of 100, you would select the samples, which bank statements you need to verify. Then physical existence of tangible assets, it can also be a population. So you need to identify, suppose there is one entity, taking an example of some manufacturing company which has 4 factories, then your population would be 4 factories, out of which you need to select the samples for conducting your physical verification. Then again, there are other examples like valid ownership. If you need to test the valid ownership of tangible and intangible assets, then your population would be title deeds. So suppose in I took an example of manufacturing company, there are 4 factories which would have 4 buildings. So for those 4 buildings, your population size is 4 buildings, out of which you need to select the samples for which building you want to test the valid ownership agreement or the title deed. Then again, confirmation obtained from external sources. Again, it can also be a population. So if you want to circulate the bank confirmations, and if you want to obtain the independent external bank confirmations, then in my example, there were 100 bank accounts, then you would need to select which all bank accounts you need to select for performing this procedure, that is the external bank confirmations. Then there are system and the procedures for entering into and processing a transaction right from the beginning. So if you are performing your compliance procedures, that is the test of controls. Then in performing test of controls, you would first obtain the you would need to obtain what are the processes in the company, like revenue process, process related to property, plant and equipment, process related to treasury, and so on. So for all these process, there would be various standard operating procedures given in the company, which would have the flow charts. Then you would need to, then this is a population for you, and you would need to select the samples, or you would need to identify whether you need to obtain all standard operating procedures or the flow charts from the company to understand the process in the company. Then system of internal control in the area of accounts. So for that, the population is the risk control metrics or the flow charts, which would be the population for the testing. And there can be other examples. So this was on the population and the sample design. And there are two methods which are given in the standard basis, which you can determine what can be your population. So it says, in considering the characteristics of the population from which the sample will be withdrawn, the auditor may determine stratification. So in my example, as I said, there is a revenue process in the company, and there are two streams of revenue in the company. So if there are two streams of revenue in the company, then each stream would be the population. So you are dividing the population basis the characteristic, or basis the qualitative factor. Then it is called stratification. So if you're dividing the population and identifying the population basis the stratification, then it is again one process, or one method of sample selection. Another example given in the standard is doubtful receivable balances may be stratified by age. So you are identifying your population. So there is suppose receivables in the company for 100 rupees. Out of 100 rupees, 80 rupees is the balance which is less than 1 year, and 20 rupees is the balance more than 1 year. And you find a risk for receivables which are outstanding for more than 1 year, which is 20 rupees. Then for that particular 20 rupees, that would be your population, and in that population you would select the samples for testing. So again, it is classified under the category of stratification, which is one method of identifying the population. Second method is value weighted. So based on certain numbers or the financial balances, you can identify, you can segregate your population. For example, individual account balance, receivable balances that contain those monetary units. For example, if there is a company which has foreign currency receivables as well as INR receivables, and if you are identifying or categorizing the receivables basis such categories, or even you can apply a monetary value, say you need to identify the balances exceeding 100 rupees, then that is also called value weighted identification of the population as per the standard. So again, both of these have their benefits. So for the stratification, it improves the audit efficiency, and for the value weighted, again, audit effort is directed towards large value items because they have a greater chance of selection. So each of these, generally in the audit process, a mix of both is used depending on the circumstances for identification of the population for the sample selection. So there are again other examples given for this stratification and value weight identification of the population. For example, for the inventories, there is a stratification that duplicate inventory items are present in the inventory ledger, or inventory items with negative quantity weighted. Then there is another example of inventory items in which cost is greater than retail price. Then another example, inventory items that have not moved in last n number of days. Then another example, inventory items with no recorded location. So these are certain examples which we generally, or you can say filters which we apply in our day-to-day practice when we perform our audit procedures. These are the examples. Some examples are for stratification. Some examples are for value weighted identification. If we talk about trade receivables, again in trade receivables, there are filters like accounts with credit balances. Trade receivables should have positive balances. If there are negative balances, again, this is an area of concern, which is stratification, identification of population. Accounts in excess of credit limit, again, this is value weighted identification. Then invoices without orders, then receivable balances over X number of accounts outstanding for greater than N number of days. So these are the examples related to trade receivables. Then certain examples on property, plant and equipment. For example, items with negative net book values or items without a location. Then duplicate asset numbers, then PP transactions over X number and PP balances over X number. So these are the examples on property, plant and equipment. And if you talk about salaries and wages, then as a part of stratification, there can be a filter of duplicate employees. Then another example is pay rates exceeding percentage above the average pay rate. Then normal hours oblique days worked exceeding X hours or days. Then total deductions are a negative amount. So all these examples are can be categorized between stratification and value weightage, which we generally apply in day-to-day audit practice. So once we identify the population and the sample design, then the next step is to identify the sample size. So when we say identify the sample size, before discussing the concept of sample size, we should first discuss what is the sampling risk. Sampling risk is if you are forming an opinion about an account balance or a particular process based on certain sample, but actually that situation is not correct, or your opinion is not correct, or that sample is not representative of the entire population, then it is called sampling risk. So if we read the definition, it says conclusion based on a sample may be different from the conclusion if the entire population was subjected to the same audit procedure. Sampling risk can lead to two types of erroneous conclusions. One is in compliance procedure, one is in substantive procedure. As we have been discussing since beginning, that sampling is used towards both test of controls, which is the compliance procedures, test of details, which is the substantive procedures. So let's take an example of compliance procedure. If you are testing the controls around revenue, then in that case, suppose you have selected a particular control that revenue transactions, price in the revenue is authorized by appropriate authority in the company. And for that, you have selected 25 invoices for testing of the controls. And basis all 25 samples testing, you conclude that this control is effective and price is authorized by appropriate authority in the company. But actually, there are certain transactions where price has been changed, and such price which is charged to the customer is much below what was authorized by the authorized personnel. Then this is called sampling risk. So basis your testing of 25 samples, you are saying that control is effective. However, that control is not effective because you haven't tested those samples, or you haven't come across those samples where the price which was charged to the customer was not authorized by appropriate authority. So this is called a sampling risk in the compliance procedures or the test of controls. Again, in the substantive procedures, you have selected certain samples for testing, and for the untested population, there is a significant misstatement which could not be identified because your sample size or your samples did not contain such items which had the misstatement. So this is called sampling risk in compliance as well as substantive procedures. Now, standard says the auditor should determine a sample size sufficient to reduce sampling risk to an acceptably low level. So how he should determine the sample size? So there are various factors given in the standard. First factor is risk assessment. So in second column, there are the conditions which are leading to smaller sample size. In third column, there are the conditions which are leading to larger sample size. So if you perform the risk assessment, if you are going to test any particular account caption, again, take an example of revenue. In the revenue, you perform your risk assessment. First, you understand how the revenue is recorded, what are the controls, what are the chances that there can be a control failure in the company. So this is that you perform your risk assessment and you identify, yes, these are the 4 areas where which would be having the high risk. Generally, in companies, revenue is considered to be a high risk area. So if you conclude that it is a high risk, then your sample size would be higher. And you would not rely on controls if taking an example of certain companies which are new in the PCOB environment. When I say PCOB environment, any company which is listed on US stock exchange would be covered under PCOB environment. So any company which is new in the PCOB environment, then for the first year, they would be uplifting their controls to the PCOB level. Then in that case, we can say as a part of audit process, we should not rely on those controls because companies are still in the process of uplifting its controls to that PCOB level. Then we would say there is a high risk. If we conclude there is a high risk and we are not relying on the controls, then it would lead to larger sample size. On a contrary, if there is a small organization and there is an area of, say, trade receivables where there is only one customer, which is also an interparty, so there is a low risk. And that interparty, there is a control in the company that every month reconciliation is performed with the customer and identified differences are resolved by the before the closure of next month. Then there is a strong control available in the company. Then we would say we would rely on the controls. Then basis such criterias and considerations, we would say our sample size would be smaller as compared to which would have been there in case of company where the which is listed on any of the stock exchange. Second factor is tolerable misstatement. So basis our risk assessment and basis our materiality identification, we identify what is the tolerable misstatement. That is the amount or the threshold below which, if there is an error, then it will not impact our audit opinion. So if you have lower tolerable misstatement, then in that case, it would have larger sample size. If you have higher tolerable misstatement, then it would lead to lower your sample size. For example, there are 100 line items or 100 transactions for the revenue, and you have a tolerable misstatement threshold of say 10 rupees, and there are only there are certain transactions. In one example, we will say there is a tolerable misstatement of 10 rupees, and in the other example, we say there is a tolerable misstatement of 5 rupees. So if you have a tolerable misstatement of 5 rupees, then you would select all the samples which have a value greater than 5 rupees, then it would lead to larger sample size. And if you have a higher tolerable misstatement, which is 10 rupees, then you would select all the samples which are exceeding 10 rupees, and it would lower your sample size. So again, it depends on your tolerable misstatement also, what would be the sample size. Then the next factor which auditor should consider is audit evidence from other substantive procedures. If the auditor is getting certain corroborative evidences from other substantive procedures, then he should he would have a smaller sample size, and on the contrary, if he doesn't have any evidence from the other substantive procedures, then he would have a larger sample size. Taking an example of revenue, or taking an example of trade receivables, suppose there are internal confirmations. You need to identify these samples for performing your external confirmation procedures. In order to do that, you would identify the samples. Then there are certain confirmations which are already arranged or provided by management, which are not independent. Then you would have certain you can say comfort, or certain level of audit evidence from the management that yes, this balance is confirmed, although it is not directly confirmed to the auditor, but it is confirmed by the third party to the management. Then you have some level of audit evidence. Then as a part of your independent balance confirmation, you can reduce your sample size. In case there is an entity which has government customers where they are not able to reconcile their balances, or customer doesn't respond to their confirmation request, the management confirmation request, then in that case you would need to increase your sample size, because there is no other audit evidence which is available for confirming the existence of the trade receivables. Last factor which is given in this standard is expected misstatements. Based on your previous experience in the audit for that particular entity, if you expect higher misstatements, then you would select larger sample size. If you would expect lower misstatements, then you would expect smaller sample size. So it can be based on your past audit experience. It can be based on if it is the first year audit, then you can refer the audit of previous auditor, and you can have a communication with the previous auditor. So based on all such information which we review or audit as a part of our audit procedures, we build on an expectation for the misstatements, and based on the expectation, if it is lower, then or higher, then we decide our sample size. So this was on the sample size, which are given in the standard. Then the next step, or the third step, I would say, once you have identified the population, once you have identified the sample size, third step is selection of the sample. So for sample selection, there are various techniques which are given in the standard. So if we see the definition of sample selection, it says that we should select the sample in such a way that each sampling unit in the population has an equal chance of selection. So our sample selection should not be biased. So there are certain techniques which are given in the standard. So it says we should select the samples which is representative of the entire population. So there are two methods or techniques which are given in the standard. One is statistical sampling, again the judgmental sampling, and again the monetary sampling, and second is non-judgmental sampling. So examples of statistical sampling are random sampling, systematic random sampling, then stratified sampling, value weighted selection, variable monetary, and stratified sampling. And the examples which are given for non-statistical sampling are haphazard sampling, block selection, judgment selection. So these are the examples given. So if we take some of the techniques and if we see what exactly they do mean. Sampling method, first is random selection, which is a part of statistical sampling. So when it is applied through random number generation, for example, random number tables. So there are certain organizations or the auditing firms which are using various digital tools, uh, to apply this random selection technique. So for that, what generally they do in the tool, you need to provide the starting number of the population or end number of the population. For example, for revenue, there are 100 transactions, then you provide the starting number as 1 and end number as 100. And suppose, and you tell the tool that you need to select 10 samples, then from 1 to 100, he would provide you 10 numbers, which would be called random samples. So this is something which is generally in practice, and some of the firms identify certain random samples through some other techniques. So again, generally in practice, what I have seen is people use random selection technique. Then there is another technique which is systematic sampling. Number of sampling units in the population is divided by the sample size to give a sampling intervals. For example, each 50th sampling unit. So again, in my example of 100 revenue transactions, if you need to select 10 samples, you divide 100 divided by 10. So every 10th transaction would be the sample to be used for the testing. Then monetary unit sampling, then it says the sample size, selection, and evaluation results in a conclusion in monetary amounts. So you identify a monetary unit. You say that each sample exceeding 5 rupees would be selected. So you identify all the, you put the population and all the samples which are exceeding 5 rupees in monetary amount, you would select such samples for testing. Then one example of non-statistical technique is sample selected without following a structured technique. So you need to select 10 samples. So from population of 100 samples of revenue, 100 transactions of revenue, you select any 10 without applying any systematic approach. That is called non-statistical technique. This technique is generally used in the compliance procedure. So in the compliance procedure, when you obtain an understanding of any process, for example, for the revenue process, you need to perform a walkthrough. So for the performing the walkthrough, you need to select one sample. You select that sample to be any sample during the year. So that is called non-statistical technique, because you are not applying any random or any statistical method. This was on sample selection techniques. So another step is, once you have identified, you have performed all 3 steps, that is, you have identified the population. Thereafter, you have identified the size of sample. Then you have selected the samples using any of the sample selection technique. Then on the sample selected in the 4th step, you need to perform the audit procedures on such sample. For example, for trade receivables, you were performing the external confirmation process or the independent balance confirmation process. So you have selected top 10 parties. You have identified the population of trade receivables. Then you applied certain statistical technique and you have identified top 10 samples to be used for performing the external balance confirmation or independent balance confirmation, then you need to perform the audit procedures. So first audit procedure is obtain the evidence that the population from which audit sample is drawn is complete. So this is the procedure which you perform at the beginning when you identify the population. Then in that population, first you need to see whether that information from where the sample is to be selected is complete or not. Because if you are not selecting the correct population, then you would not be able to provide your conclusion on the entire balance. Suppose for the trade receivables, the total balance is 1,000 rupees. However, the listing which is available, which is provided by management, is of 900 rupees. Then you cannot select the samples from a population of 900 rupees, because you would require the population of entire 1,000 rupees to select your sample. So first step is you obtain an evidence that population is complete. In audit terminology, it is called testing of IPE, information provided by entity. So there you test the completeness and accuracy of that information before you select your samples to perform the testing. So in my example of trade receivables, you have obtained the population of 1,000 rupees. And from there, you have selected the top 10 samples, which is aggregating to 200 rupees. Then on those top 10 samples, you need to perform your procedure. On each sample, you need to perform. Our procedure was independent balance confirmation letter, which needs to be sent. So for each of the 10 parties, you would obtain an authorization letter from the management, which is to be sent to the customer for confirming the balance. Then this way you are performing the audit procedure in each of the sample which is selected for performing the audit procedure. Then next step is, if the audit procedure is not applicable to the selected item, the auditor shall perform the procedure on a replacement item. For example, if you are performing the procedures on bank transactions and bank payments, and there is one of the transaction for which check has been subsequently cancelled, then this transaction will not be relevant for your testing purpose, because there would be a reversal which would be coming in those bank transactions for this cancelled check. So what you need to do, you would replace this sample with another sample, and again for that you can use any of the sampling technique. You can use the next available sample in that particular ledger dump, or you can apply any other technique for performing the replacement of that particular sample where your audit procedure is not applicable. Then next is if you are not able to perform the desired audit procedure, then you need to perform the suitable alternate procedure. So example of this, in my example of trade receivable, there were 10 parties for which the confirmations were circulated, and third party was requested to confirm the balance. Out of 10 parties, 7 parties have confirmed. However, for 3 parties, you were not able to obtain the response to your positive balance confirmation request. Then you can perform a suitable alternate procedure on such samples, and the suitable alternate procedure can be testing the subsequent cash collection or testing the invoices against those 3 receivable balances. So you can identify any suitable procedure. This is your professional judgment, and using that you can perform the suitable alternate procedure for such particular balance. Then last is if the auditor is unable to apply audit procedure, alternate procedure, the auditor should treat the item as a deviation from the prescribed control. Suppose in my example of trade receivable, For 7 parties, the confirmation was received. For the 3 parties, confirmation was not received. And out of those 3 parties, for 2 parties, auditor was able to test the subsequent collection as well as the invoices. And for 1 party, neither the invoices are available as to against which invoice such balance is outstanding, nor there was a subsequent collection, and it has been a significant time since the balance sheet date or since the date on which the balance was outstanding. Then it can be considered to be a misstatement. So since my example was for test of details, then it would be considered to be a misstatement. Take an example of a test of controls. If you were testing the controls around the revenue, and for while testing, say example of 25 samples, you identified exceptions across couple of samples, and then you again selected additional samples to see whether such deviation is existing against those 2 transactions only, or against other examples also. Then if you identify for the additional samples that there are control failures against those 2 additional samples as well, then it would be considered to be a deviation. So as I initially said, if there is discrepancy with respect to test of control, it is called a control deviation. If there is a discrepancy while you are performing the test of details, it is called a misstatement. So if you are not able to perform your procedures or alternate procedures for any of the sample, and such sample is representative of the entire population, then it would be considered to be a deviation in case of test of control, and it would be considered to be a misstatement in case of test of details. So this was around the procedures. Now you have identified the population. You have completed the 4 steps of sampling journey. One is you have identified the population. Second, you have identified the sample size. Third, you have performed the procedures. The next step is you need to evaluate the results of your procedures. So in order to evaluate the results of your procedures, you have observed whether there are any deviations or misstatements as a result of your audit procedures. Then you need to investigate such deviations and results. How you investigate the cause of such deviations and misstatements? First of all, you identify or you see whether you need to have certain considerations. So as a part of your considerations, you see certain qualitative aspects of the misstatement, whether such misstatements have a common feature with the other identified misstatements. For example, there were certain errors in the invoices. So there are certain invoices which were raised in the system, but it was not billed to the customer. Simultaneously, there is another audit procedure that you have obtained an independent balance confirmation from the customer. So the invoices which were not billed to the customer, which you have observed or identified as a part of your revenue testing, you see the same difference in the balance confirmation from the customer, then you see that it has a common feature with the other identified misstatement. Then you conclude whether it is a deviation or not, or misstatement or not. Then another consideration is whether such misstatement results from an error or potentially indicates fraud. So in my example, there was a certain invoices which were not billed to the customer. So it is a potential indicated fraud. So again, this consideration also you need to apply while evaluating the results of your audit procedures on the particular sample. Then next is misstatement results from a misunderstanding of instructions or carelessness. So there can be a possibility that the accounting staff did not send those invoices to the customer, and that is why they are not covered by the customer in the independent balance confirmation. So again, this is also one of the consideration which should be considered. Then the last one is the possible effect of the misstatement on the other areas of the audit. So if you have identified the misstatement in one area, then you need to see whether it is affecting any other audit area or the caption. So if you have a difference in you have identified the discrepancy in testing your revenue samples, then it would have an impact on the trade receivable side as well. So these are the considerations which should be considered for identifying the cause of the misstatement. So next step in sampling journey is this is a part of evaluation of misstatement only. This we have covered. Yeah. So you have identified the population, you have identified the sample size, you have identified the sampling technique to be used, then you have performed your procedures, and basis the procedures, you have identified certain misstatements, and thereafter you have identified what is the cause of that misstatement. Now you need to evaluate what is the impact on your audit opinion. So auditor to evaluate what is the result of the sample and whether the use of audit sampling has provided a reasonable basis for the conclusion. So suppose in testing the revenue, there were the top 10 samples. So there were total revenue of say 100 rupees, and as a part of sampling strategy, there was one monetary amount which was identified by the auditor, say 5 rupees. He has applied a sampling technique that all the invoices exceeding rupees 5 would be tested. So in this case, he would see what is the coverage he is getting. So at the end, he comes to know that there is none of the sample which is selected, none of the sample is exceeding rupees 5. Then in that case, he would need to see what is what is the conclusion he's driving through application of such sampling technique, and he would see whether he need to modify his sampling technique. So whenever any auditor apply the sampling technique, first he see what are the key samples, and thereafter he performs the representative sampling testing. So in his key sample identification, he did not identify any of the sample. Then he would move to the representative sampling. Now, as a part of test of details, if auditor has identified any misstatements which are exceeding the tolerable misstatement, and he's not able to obtain a reasonable basis for the conclusion about the population that has been tested, then in that case, such a misstatement can be considered to be a deviation in case of control and misstatement in case of a test of detail. And another topic which is given in the standard, it says unexpectedly high misstatement amount in a sample may cause the auditor to believe that a class of transaction or account is materially misstated. So in my example of trade receivable or say revenue, if he comes across, so example of trade receivable, there were 10 parties for which the balance confirmation was circulated. So against 10 parties, the confirmation has been received for 7. Against 7, if he has observed that there are differences in all 7, then he may draw a conclusion that yes, trade receivable balance is materially misstated and it requires an adjustment in the financial statement. So this is another consideration while he is evaluating the results of his sample testing as a part of test of details. If he's testing the control, if there are high samples where our deviations are identified. So in my earlier example, when he was testing the controls around the revenue process of the company. So in a test of revenue process, he would see, for example, he had taken the sample size of 25, and out of 25, he observed a control failure against 10 samples, which is again a very high number when you're testing the controls. So if there are deviations in 10 samples out of 25 samples, then uh, he may draw a conclusion that there is a risk of material misstatement in that particular area, because a very high number of deviation rate is observed when he was performing his test of controls. So what auditor should do? If audit sampling has not provided a reasonable basis for the conclusion about the population, then auditor may either request management to investigate misstatements. He may ask management that these are our observations, and this is that you should perform an internal inquiry or investigation to identify why there are such huge number of misstatements. Or he may tailor the nature, timing, and extent. So as a part of test of control, if he has observed many control deficiencies, then he would not rely on the controls, and he would extend the nature, timing, and extent of his substantive procedures. He would select high number of samples as a part of substantive procedures and perform a detailed testing around that in order to form his opinion on revenue process in my example. So this was this was the journey, I would say, around the sampling, which is given in the standard. So again, to recall, first step is the identification of the population. Once you have identified the population, then you would need to identify the sample size. What would be the sample size for test of controls as well as test of details? Then once you have identified the sample size, then you would need to identify the sample selection technique. Generally in the practice, the random sample selection technique is used. Once you have identified the sample selection technique, then you would need to perform the procedures on the samples identified. On the samples identified, once you have performed the procedures, then you would evaluate the results, whether there are misstatements or not, or deviations or not. And basis the misstatements and deviations, you would identify the cause. If you feel that these are due to certain errors on the part of the management, then you would design or change the nature, time, and extent of your audit procedures. And also you would see what is the impact of your testing on the other audit procedures. There are certain samples which I have covered as a part of my slide, the practical examples, which talks about what should be the sample size in a particular case. So this is for the sample selection for the test of controls. So for controls, your sample selection is based on two things. One, what is the frequency of that control? And what is the extent of IT involvement in that particular control? So when I say frequency, whether that control is performed daily, weekly, monthly, quarterly, semi-annually, yearly. So what is the frequency? So for example, bank reconciliation is prepared by the management on monthly basis. So this is a monthly control. So the frequency of such control is 12. Or you can say the sample population would be 12 and frequency is monthly. So let's take certain examples. There is an entity which has a three-way match control that compares the purchase orders, receiving report, and invoice. The system provides an exception report each time a match cannot be made. So it says there is a three-way match control for the purchase order, receiving report, and invoice, and it is a system control. It is something that system performs on its own. Since it is an application control, so test of one would be sufficient. So this is again, which is prevailing in the practice. And this is a suggestive sample strategy. And this is the practical situation, the sample size matching. But in a general scenario, for the application control, the sample size is generally considered to be one. Again, the same example. An entity has a three-way match control that compares the purchase order, receiving report, and invoice. In this example, the IT application that generates the purchase order does not automatically interferes with the IT application that generates the receiving reports. Instead, an account payable clerk obtains the necessary documentation from the various IT applications to create the voucher package. On a daily basis, the accounts payable clerk manually compares the number of items as per purchase order, receiving report, and invoice. So there is some IT part, and that IT part is it generates the purchase order. But for interfacing with the reconciliation with the invoice and the receiving report, there is a certain manual intervention. So generally these kind of controls are called IT dependent manual control, because purchase orders are generated by IT system and thereafter the remaining process happens manually. So in such kind of controls, it is appearing to be a control which is performed on daily basis or on a continuous basis. In practice, sample size of 25 is generally considered. Again, sample size can be different, but it is in general practice, it is generally to be 25. Another example, same as given in the above, where there was a manual intervention. So the only change is there is an account payable manager who reviews on a weekly basis. So there is a review control that the three-way match, which is performed by accounting clerk, is being reviewed by account payable manager on a weekly basis. So there is a weekly control. So the frequency of this control is weekly, and there would be 52. The sample population size would be 52. So out of 52, any number of weeks can be selected. This is the professional judgment. Generally in practice, 5 weeks are tested for any control which is a weekly control. If we see more examples, an entity has one bank account that it reconciles on a monthly basis, as this control operates monthly. So the suggestive sample size is 2 months. It can be 3 or 4 basis the professional judgment. But again, in practice, generally 2 months are tested as a part of control testing process. Let's take one example where an entity has 20 bank accounts and they prepare the bank reconciliation statement on monthly basis. So what should be our sample size? Generally, in this case, first population is identified. So if we follow our sampling cycle or sampling journey, then first we would identify what is our population. Our population is 20 bank accounts into 7 months. So there would be 140 reconciliations per month which would be available. So and so in this case, generally sample size is considered to be 10% of the population. If even if we multiply it with 12, then it would be higher. Then in that case, generally 10% of the population is considered to be a sample size. Again, it is suggestive. It can be more or less basis the practical situation. So if the starting point is you identify your population, and after that you identify your sample size. Now, if we talk about how do we select the samples in case of test of details. So as I said initially that whenever we are performing a test of details, first we identify key items to test. Thereafter, we identify the representative samples. So it is written there that we do not begin our substantive strategy with representative sampling. What we do, we first identify the key items. We see what kind of audit evidence we have obtained from such key items, and thereafter we would determine what is the extent of representative sampling we need to follow. So what is written in the standard, it says we consider whether other substantive procedures can be performed over the population, including testing key items to obtain sufficient appropriate audit evidence. So first we test the key items. For example, when testing the existence of receivable through confirmations, we may consider evidence obtained from our cutoff procedures, which also addresses the existence assertion. So again, we identify what kind of evidence we have obtained from other audit procedures, and thereafter we decide what is the extent of our representative sampling we need to decide. So there are certain questions which are given in frequently asked questions on various standards issued by accounting standard setting bodies. So first question is, if there are multiple line items in the income statement as one population, if those line items are generated by same Scott, so can I test multiple line items? Yes. For example, there is an expense, selling and general administration expense. So there are various line items in that particular so other expenses would have various parts like selling expenses, then other expenses, then there would be certain impairment expenses. So what I need to do as a part of our sample selection strategy, can I select various transactions within the selling expenses? So it says yes. If the transactions are generated by same class of transactions and are determined to be homogeneous with respect to testing attributes and in terms of risk or material misstatement related to a population particular session, they can be combined into a single population for testing. So it says yes, for selling, general and administrative expenses, you can consider this particular category of expense to be one population and you can select the samples. So in order to determine, as we discussed initially, first step is to identify your population. So your population should be the group of homogeneous transactions. And after that, you can apply your sample selection strategy or technique to identify the samples. So another example is you cannot combine the selling expenses with the impairment expense. So if you combine both, then it would not be homogeneous set of transactions. And your conclusion, if you perform the testing basis the combined population of selling expenses and impairment expense, then your conclusion would not be correct. There is another question. Are we required to test the sample size when the sample size is larger than or represents a considerable percentage of population size? So taking an example of other expenses, say traveling expenses. So in the traveling expenses, there are n number of line items, and within so there is no linkage available, as in suppose there are 500 line items, and you cannot categorize those 500 line items through some judgment. Then what you should do as to identify your sample size, you are not supposed to test all the 500 samples. What you can do, you can apply, because the characteristic of such transactions is same, that it is traveling and other kind of expense. Then what you can do, you can identify your samples, representative samples on that particular entire population. So for traveling expense, the first step was to identify the key items, and you were not able to identify the key items because each sample was of very low value. Then what you can do, you can apply a certain sampling technique, and basis that you can identify the representative samples to proceed with your testing. Then there is another example or question, you can say. It says revenue journal entries are booked on daily basis, but each journal entry consists of multiple revenue transactions. We determined that each individual revenue transaction was our sampling unit, and that we needed to make 40 selections per the income statement uh, as per our sampling strategy. It is impractical to obtain the detailed population of sampling unit level for year or select random transactions or dollars. So let's take an example of any industry where let's take an example of any retail industry. So in retail industry, each day hundreds of invoices are recorded. Take an example of Big Bazaar. So there, these retail outlets have on daily basis various revenue transactions. So as a part of their process, they consolidate all the transactions and they post one single entry in their revenue recognition or accounting software. Uh, so in this way, there would be 365 transactions for the entire year, which are recorded in the accounting software. So if we consider our population as 365, then if we identify the samples, say we have identified the 25 samples, then within those 25 samples, there would be further subsamples. So do we need to test all subsamples? No. First of all, we should identify our correct population. So our correct population is a detailed single transactions which are performed with the end customer. So suppose on each day there are 10 transactions. So our population size would be 3,650 transactions. So our population should be 3,650, and we should identify our samples from such population. So selecting our population from 365 transactions which are recorded in the accounting software for ease of accounting would not be appropriate. Coming to our conclusion part, so there are three topics which we would discuss. One is limitation of the sampling. Yes, sampling has its own limitation because through test of samples, it does not relieve the auditor from his responsibility. He is still responsible for his opinion. Based on sampling, if he has provided an opinion, then it does not reduce his risk. Second is important to match the type of sample needed to the type of analysis required. So again, in the sampling, as I said, first you need to identify the population, and in order to identify the population, you need to understand what is the purpose of your audit procedure. If you're testing the revenue, then you need to see you're selecting the appropriate population, that is the revenue transactions during the year. So there is an exercise of matching with the purpose, with matching the purpose with the population. So again, this is one of the limitation which takes a significant amount of time. Then third is auditor to check the quality of the information from which the sample is to be drawn. So again, as I'm saying again and again, that population identification is the first step. It is the critical step. And in the population identification, auditor needs to see the accuracy and completeness of that population. So if the population quality is poor, then the conclusion drawn basis the sampling will also be poor. So these are certain limitations of the sampling, that it is dependent on the quality of population. It does not relieve the auditor from his responsibility. It does not reduce the auditor's judgment. Auditor will still have to apply his judgment and all. Then there are certain key documentation considerations. So in our audit process, in each area, we apply a sampling strategy, as we discussed, as a part of our test of controls, as a part of our test of details. We apply our sampling strategy. Then, as a part of our documentation, we should document what is the strategy we have applied, how we have selected the sample, how we determine the sample size. So all these should be documented in our work papers. And there are certain key ICI resources which are available in the public domain, say SAs 530. And there is one implementation guide which is also available, which can be referred for in future for obtaining the further guidance on SA 530. So this is all from my side. Aniji, are you there? So I would request Anilji to take up the questions if there are any questions from the participants.
Good evening.
Thank you so much.
Q&A session is going to start.
So can you hear me?
Yeah, I can hear you.
Sir, there are a few questions. First question is, what is the maximum sample size needed in case of voluminous transaction business, where controls are in order, and how is the arrived using computational model?
So it depends on the population which you are testing. As I said, for taking example of revenue, if there are 1,000 line items, then first you need to apply a judgment to identify the key items to be tested. You can take a monetary threshold that in considering the nature of the industry, if you select, say, any sample again exceeding 1 crore rupees would be material, so you consider those samples to be key items. And suppose with the key items you have covered 80% of the population, then you do not need to perform the representative sampling. So there is no clear guidance available as such as to what should be the maximum size.
Good evening, reviewers. TNI
Just
session is.
This is from our side.
Yeah, actually, it was from my side.
Okay, sir. Okay.
Yeah. So there is no maximum size or guidance available to say that this should be the maximum size of the population. So it all depends on the professional judgment and the practical situation.
Ji, sir. Sir, is statistical sampling mandatory under SA 530?
No, it is not. Yeah.
Yes, yes, sir.
Please complete.
Yeah, it is not mandatory, no?
No, it is not mandatory.
Is stratified sampling dividing sample into A, B, and C strata based on value materiality and verifying 100% of strata A, high value, 10% of the strata B items, and nothing from strata C, low value items, complying with SA 530?
Yes, it is complied. Although I could not gather that much of information. If you can make it visible, then it would be more appropriate for me to answer. But yes, whatever I could understand, the participant is trying to divide the population into 3 categories. One is high value, then medium value, and the low value. For the medium values, he has identified certain samples, and from the low values, he's not identifying the samples. So again, if this is the professional,
Good evening, reviewers.
just again.
TNI session.
Yeah. So if total of low value category of samples or population is not significant to the overall audit, then yes, it is appropriate if no sample is selected from the low value category.
Sir, in audit or in case of maybe bank audit, while verifying advances, what is the ideal percentage? sample?
Ideal percentage, again, practically, it depends on the professional judgment. I cannot quote a number to say yes, 70% should be tested or 80% should be tested. So it depends on the judgment of the professional who is performing the audits. For some auditors, 80% would be required. For some auditors, 60% would be sufficient because they have a pretty much confidence basis their past experience with that particular bank.
Yes. Sir, can you please elaborate and throw light on the meaning of block sampling and how do we apply it in the process of our audit?
So
Block
again,
sampling.
log sampling, LOG, right? So for log sampling, so again, there are various digital tools which are available in the market, which various auditing firms use. So as I gave an example of random sampling. So there are digital tools which, and within that tool, there are certain logs which are defined when such tools are designed. So again, log sampling is a kind of random sampling only. So as such, practically, I haven't seen anyone to say, yes, this is the method through which I have applied the log sampling. So practically, people use digital tools only to identify the samples.
Sir, if the cumulatively corrected misstatements is very material, whether the auditor needs to revise his planning completely and consider carrying out audit procedures all over again?
So I would say because auditor reassesses his audit approach simultaneously throughout the audit. It is not something that he need to reassess towards the end of the audit. So he keeps on looking at his audit strategy throughout the audit. So he shouldn't wait for the end to see, yes, his misstatement is extremely high. So if he's continuously looking at his audit strategy continuously, then definitely this situation will not arise that he would need to revise his planning entirely.
Yes. Sir, does the tone of at the top, that is the high governance standards of the amendment, have any bearing on the audit sampling? Will these qualitative considerations impact the nature and method of audit sampling process in overall audit plans?
Yeah, I would say yes, because if you're saying tone at the top is very qualitative, it means that that particular entity has very strong controls, whether it can be entity level controls or transaction level controls. Then if the controls are effective, if you're saying, I'm assuming the controls are effective, then the size of samples which would be selected in substantive sampling would be much lower.
Yes, sir. So one last question, what can you please elaborate IPE sampling?
So IP is not a sampling, I would say. IP is information provided by entity. So as I said in my session that population selection is the first step for sampling process. So once you identify the population, you need to test the quality of that population. And population in another name is called IPE, information provided by entity, from where you need to select the samples. So there is no sampling as such of IP. You need to identify the population where you need to test the samples. So that would be 100%.
Yes, yes, sir. So thank you so much, sir, for such a wonderful deliberation. And on behalf of AASB of ICI, I extend my heartiest thanks towards you for sparing your valuable time and for this detailed and wonderful deliberation. Thank you so much, sir.
Thank you so much.
Thank you,
everyone.
thank you, sir. Namaste.